Hello, everybody, and welcome to the Vancouver Resource Investment Conference channel. My name is Jesse Day. We're counting down to the next VRIC, January 21st and 22nd. There's a link in the description below where you can get your tickets. And we are continuing on with the panel concept, bringing the VRIC to you online. And we're joined by two very special guests, Gwen Preston of Resource Maven and Peter Krauth of Silver Stock Investor. And we are going to be talking about metals vital to producing energy in all forms and vital to the energy transition. We're going to be talking uranium, silver, copper, and more. Very excited and very excited to have both of you on the show. Thanks for joining me.
Thanks for having us.
Looking forward to it, Jesse.
Well, I want to start with a more broad question, just getting an overview of the energy transition, how it's currently progressing, any challenges you see it facing, and why metals and mining is so important to the process. And I'll start with you on that, Peter.
Well, I actually just recently came across a very interesting report from the International Energy Forum. What they did was a meta-analysis of 11 different other public reports, and they analyzed all the metals that we're going to talk about today. And they also created a chart that shows what different countries consider to be critical minerals for the energy transition specifically. And I think there were well over 50. And silver, which is kind of my wheelhouse, ranks in that list by 14 different countries, from what I remember, every one of the metals that they analyzed across the transition and in the different reports, all are looking at potentially serious shortages in just sort of the next 8 to 10 years, and that just tends to multiply depending on how far out you go. So there's no question that all these metals are going to be crucial to try to meet these goals.
Yeah, and I think that's interesting that some countries consider some metals and minerals as critical and others don't. Do you think that's one of the potential challenges, Gwen, is getting enough of these countries on board to all agree that all these exact minerals are critical to moving this transition forward?
So Peter and I are just wrapping up our next issue of the newsletter we write together, which is called Evergreen Investing. And that issue is about deglobalization and the green transition and the interface of those things. It's actually been a really interesting component of everything that has been going on for the last decade, is this sort of trifecta, which is we keep having major events happen in the world that require government stimulus intervention, from COVID to the great financial crisis, Brexit, all these sorts of things require stimulus, require governments to step in. But those have happened in a context where we're trying to go green, and governments are increasingly realizing that the things that we need to go green, we don't have enough of. So that's the technologies, but it's also very critically these minerals. So yes, one after another, countries keep coming up with these lists of critical minerals, and they're absolutely on point. There are not enough of many of these minerals. And of course, from country to country, the things that they each lack differs. So it's a really important question at the front of this sort of metals investing thought process is, where are you investing and which metals are sort of going to be at the front of the pressure for that location? So, I mean, there's examples of metals where that thought process has gone further. So the United States is creating a strategic uranium stockpile, right? And that's because they early on, so quite a few years ago, realized that they rely on Russia for their uranium, and for a big portion of their uranium. And guess what? That doesn't work. And so they need to encourage domestic production, but it takes a long time for domestic production to happen, blah, blah, blah. So now they have a strategic uranium stockpile that they're trying to gather from at least friendly countries, and they're encouraging domestic production. That kind of thing is going to play out. And what's really interesting, I think, for metals investors is that one of the key reasons we're in this situation being the world doesn't make enough of the metals that we need. Well, some of them, it's because 20 years ago, before the green transition, we didn't use them, like lithium, whatever. We used it to make ceramics. Nobody cared about it, really. And now we need a whole bunch of it. So that's one category. The other bigger category is metals that we always needed, but now we need way more of them. But as our needs have increased, the focus on making new mines has gone down. And it's because investors have been making lots of money in lots of other places. The green transition ironically felt for a long time anti-mining. So that sort of worked against its own best interest. There were lots of reasons why metals production was declining. And so now we're in this odd situation where our metals needs are really ramping up, and there isn't enough because we haven't been building new mines. It's being harder and harder and harder to build new mines. And so it's a bit of a perfect storm for investors. While considering that storm, I think investors do need to pay attention to this critical minerals or resource nationalism angle to it, because I think there's certain metals and minerals that will do particularly well in each jurisdiction based on that jurisdiction's particular need for that metal. So I really pulled a whole lot of things into that statement. Hopefully it came out clear.
No, it absolutely did. And you were speaking about uranium, so I'd like to start with that. Obviously, we're seeing a new nuclear renaissance. Governments around the world are all pivoting towards nuclear energy more and more. We're even seeing a lot of countries that used to be opposed to it, extending reactors, making plans to build new reactors. Talk to us about why uranium is so important, why nuclear power is so important. Obviously, the cleanest, safest, most efficient form of baseload energy. And I'll start again with you, Gwen, and then after that, I'll throw it to Peter to give his thoughts too.
Well, I love that you said in that question, it's obviously the cleanest, safest, most reliable baseload power. You know that, and I'm sure lots of the people watching know that, but that wasn't, it still isn't, it certainly wasn't a widely known or accepted statement even just a few years ago. And nuclear has, of course, gone through its ebbs and flows in public sentiment, but Fukushima really kicked it in the butt, and it was down in the gutter for a long time. Even right now, when we're seeing Japan start to release its radioactive water, I kind of hate calling it that, but anyways, from the Daiichi disaster back into the ocean, I actually am interested to see that I'm heartened, I think I would say, to see that the response is actually quite temperate. There's not a huge uprising of revolt against this. And I think that captures the moment nicely. And the moment is that there was, in the general sense of the green transition, there was gradually, very slowly, the realization was settling in that nuclear is an absolutely essential component. Yes, we can build solar. Yes, we can build wind. Yes, where there's hydropower, that's a great option as long as people can accept the environmental impacts of building new dams, things like that. But when we want significant baseload power for the electrification that we are, globally trying to achieve, we need nuclear. And yes, it's the safest. It is far, far, far safer than coal, for instance, which is one of the other alternatives. It's safer than gas. It's safer than all of these things, and lower impact, and has no greenhouse gas emissions. This realization was slowly building. And then what was interesting is that Russia invaded Ukraine and sort of pushed the need to accept this reality to the fore. And so these aren't things you can plan for. All the nuclear advocates in the world could never have wanted or expected that a war would do that, but this is the kind of thing that happens, and it really worked. And so yes, we already had seen things like California turning around and extending the life of a nuclear plant that they had planned to cut. So it was happening, but then Europe was really forced back on board with nuclear for all of the countries that were sort of like, should we follow Germany or should we follow France? Which way should we go? They're like, France, you've got it. We need nuclear power. And so there's that. That's the big picture thing where there's countries around the world, and even countries like Saudi Arabia, big oil powers, are building nuclear reactors because they have long visions and they understand that oil isn't going to last forever and they need to diversify their energy supplies and their economies. And so they're building nuclear. So that's the sort of large scale infrastructure. The other really interesting part of the infrastructure build out and drive for nuclear are small modular reactors, which have been a discussion point in the uranium world for a long time, but not really a reality. Like they've been, this is going to happen. This is going to happen. Well, now it's starting to happen, right? And there's money being put in from governments, from investors. The first ones are being built. If this takes off, and I don't think that that's really an if, it's when this takes off, it will change how remote communities or pieces of infrastructure, mines, process plants, whatever, get power. And it will add a significant new source of uranium demand. And so these forces are all coming together. So there's the massive infrastructure from governments, nuclear power plants. There's the small modular reactors, a really growing segment that is going to accelerate over the next little while. And guess what? Just like in my last answer, we don't have enough. There haven't been enough new uranium mines built. We don't have enough uranium production to feed all of this new demand. And so this is happening. And I could talk for the next hour about the details of the uranium space. That's not what we're here for. But I do think that it's setting up. And I think what's interesting right in this exact moment is in the summer doldrums when like everything else has been boring as all get out, uranium has not been boring. Uranium has actually been pretty interesting in the last little while. And so it's happening. How quickly, when exactly, we shall see, but it is happening. And I think it's going to be a pretty dramatic market as it unfolds.
Absolutely agree with you. Peter, do you have anything to add to Gwen's comments on uranium?
Sure. Well, actually, just a couple of small points. Actually, something that you said, Gwen, made me realize that if you look at what happened to the whole nuclear sector when the problem with Fukushima hit back in 2011, I got the sense, or I guess what struck me is that this Russia-Ukraine war is almost the reverse of that. It's kind of kicked things back into high gear, whereas Fukushima did the opposite, right? And so that's interesting. We have this sort of quickly leveraged up feel about what's happening in the sector. And Gwen gave plenty of examples, but something that I came across just a day or two ago was that, we look at, and obviously Europe is greatly impacted with this Russia-Ukraine war. But Sweden is a great example. They just recently lifted their ban on uranium mining. They're aiming to double the electricity that they produce over the next 20 years. That's just across the board from any source. Right now, nuclear is 40% of their electricity. And back in 1980, they decided to phase out nuclear. Then in 2010, so they were actually quite a bit ahead of the curve. And this was just a year before Fukushima, but they repealed the policy to phase out nuclear. And so Sweden actually has something like 80% of Europe's uranium deposits. So that's a place to keep an eye on in terms of where there's some potential for discoveries, for production over the next few years. Sweden could really be a bit of an indicator of where things are going worldwide in terms of nuclear and in terms of uranium.
Well, let's shift gears to silver. Peter, we've discussed before silver's increasing use in solar panels. Obviously, a lot of silver is needed to make EVs. But even putting all of that aside, it's needed in pretty much every sort of electronic device. It's the best conductor of electricity known in the world, I believe. And it's not only the energy transition, but the fact that we're also seeing a new middle class emerge in a lot of developing nations, which means an increased demand for electrification. So as the author of The Great Silver Bull, could you talk to us about the setup for silver and why it's so important?
Definitely. So, I mean, one of the biggest, aspects to look at right now is solar, because I think it's really on the industrial side for silver demand. It's really leading the charge. It's already about 13% of all silver demand. Last year, the silver market had its largest deficit ever. It was 237 million ounces. 2 years earlier, it was a 50 million ounce surplus. So that was a 300 million ounce swing in just 2 years. And the Silver Institute expects ongoing deficits for the next several years. You've got the Silver Institute, you've got Bloomberg, you have S&P Global that are all revising their solar power output forecasts for the next 3 years much, much higher, anywhere from like 30 to above even 50% higher than originally. So, I mean, you balance that against mined silver output, because the silver has to come from two places, either recycling, which obviously at higher silver prices, you're going to get more recycling come to market. But from mined silver output, there's really almost no progress whatsoever. We're already, mine production peaked in 2016. We're back at 2013 levels. So we're actually producing today what we produced 10 years ago. And yet the demand is so much higher. And then you're facing things like resource nationalism that's just making things more difficult, more challenging. You have Mexico that this year decided to block issuance of open pit mining. It's going to limit exploration restrictions. They're the largest silver producer in the world. And, obviously this is with solar, with, as you said, electrical, electronics, medical. It's certainly crucial to the green transition. You have EVs, you have charging stations, wind power. It's really all across the sector and well beyond. And in that report that I talked to you about at the very beginning, which is from the International Energy Forum, they showed how 14 countries consider it to be a critical energy transition mineral. So, I mean, the demand actually, there was a chart in that same report that showed, and this is again across these 11 reports where they've taken them all into account, and then they've come up with a median. And so the median demand between currently is right around 5 kilotons, which is about 176 million ounces of silver. They figure that's going to double just by 2030, and it should triple from current levels by 2040. So that would mean by 2040, half of all the silver will go to just energy transition demands. And the numbers are staggering. That's going to be almost over 2 times what Mexico produces today. And Mexico is the world's largest silver producer. So, and then if you balance that with all kinds of ongoing geopolitical concerns, problems with inflation, risk of inflation, risk of things like recession, all these factors, uncertainties, geopolitical stresses, tensions, and so on. Now the BRIC nations are growing. People are looking for safety. They're looking for tangible assets. And silver has been money and an inflation hedge for millennia, even longer than gold. And when silver gets going on the demand side, it just can explode higher. So you've got these two really bullish drivers for silver: the industrial demand, the investment demand, and even jewelry has been, silver has become favorable in jewelry, fashion jewelry in particular, last few years. Maybe it's because gold prices have gotten so high, but for one reason or another, that's been the case. So from all these different angles, the demand for silver is just ballooning, and it's hard to see, some kind of a market where it's not actually going to perform well. The demand versus the industrial versus the investment demand, if one is underperforming, odds are the other will outperform and help to really buoy the silver market as we go forward. So deficits are expected for the next multiple years as we look ahead.
And Gwen, as we see silver's industrial use continuing to climb, do you think there's any possibility that it might no longer be identified as a monetary metal? I don't see central banks accumulating silver. Obviously, they call it the poor man's gold because it's obviously a lot more affordable for people who want to preserve their wealth, take their money outside of the traditional financial system. Do you think that trend will continue and there will be a big investment driver from the retail investment side, as we saw with the silver squeeze movement previously?
I mean, I never know. Like the silver squeeze was a surprising thing, an artifact of a bunch of different things that evolved in the post-COVID craziness of markets. You started by asking, do you think it'll become mostly an industrial investment? To me, it already is. Like that is how I view silver. I view silver as an industrial metal with this incredible green demand, with insufficient supply and inelastic supply, because it's often a byproduct of other metals at mines. That's how I view it. And I think the paradigm shift that is the green transition will only bring more people over to my viewpoint. I'm not trying to say that I'm right. I just think that it's a reality of how silver is being used. And yes, and the fact that there's also more diversification in the investment options. Like everything crypto has meant that you don't necessarily need, if you want to call it that, multiple precious metals. You've got gold, and then you've got crypto or NFTs or whatever. So there's new alternatives in that space. And so, yes, I think silver will become primarily considered an industrial metal that is just key in this green transition, that is very undersupplied. I think it's basically already happening. There's always going to be the silver bulls, right? There's always going to be the people who see silver as an investment, and it will work because anything that's going to increase in value because of an industrial supply demand problem, it will work well as an investment holding as well. And so that's fine. It will, as Peter said, add a layer into that argument, into that evolution. But it's I think the evolution is going to be primarily industrially driven.
What's up, guys? Quick break. My name is Jay Martin. I'm the CEO of Cambridge House and the host of the Vancouver Resource Investment Conference. I wanted to quickly point your attention to a link right beneath this video where you can subscribe to our new weekly newsletter. If you want to better understand the minds of the best investors in the resource space, subscribe to this newsletter. I author it personally every Sunday, and I love writing it. Hit that link below to subscribe. All right, back to the interview.
Well, let's talk about copper now, another metal absolutely essential to electrification, and one where S&P Global is projecting massive shortfalls in supply that will make it so demand is unable to be met for the goals of the energy transition. And just in general, the amount of time and money it takes to bring a copper mine online is absolutely astronomical. And there are very few producing mines at the moment. So let's start with you, Gwen. How do you see the setup for copper right now and moving forward?
Oh, copper. I mean, the copper deficits looking ahead are ridiculous. But the thing is, so I not that long ago, I gave a talk on and copper was part of that talk. And somebody afterwards came up and said, but we've been projecting copper deficits ahead for years, and like the price hasn't ever really responded. And I was like, you know what? That's fair enough. That's a fair statement. It is taking a very long time for this thesis to play out. I think the things that are going to make it happen in the next little while, perhaps, it goes back to what we were discussing at the beginning of this conversation, which is this strategic or critical minerals thing. And the fact that governments are recognizing that this green transition is not going to happen unless they actively support particular needs. And minerals are very much on that list of particular needs. There's lots of other things. There's regulation, there's technologies that need to happen, blah, blah, blah. But one of the real things that's really on that list are particular minerals. And if you don't have enough, or you don't have access to enough, because your country doesn't produce it or friendly countries don't produce it, that is going to stop your ability to green transition in its tracks. And copper, it's funny, when we talk about critical minerals or green metals, a lot of times people think of smaller ones. They think of cobalt, they think of scandium, they think of and those are very important. They're important in, technology and magnets and in small parts, in small batteries, things like that. They're useful, they're important, but nothing moves electricity safely the way that copper does. We can't electrify without it. And there's all those images and numbers out there that show you how much more copper we need in the electrified world versus in the, fire-powered world. And so this realization just keeps growing in the levels of government, in society to some extent. But what's holding the market back, the reason I think that this market hasn't started yet, there's two reasons. First of all, governments have been a little bit distracted by COVID and inflation and sort of larger macroeconomic things. They haven't had the opportunity to really focus on specific aspects, on all aspects of the green transition. Yes, for sure, stimulus packages have been very green, and that's helped. But there's aspects of the green need that have fallen by the wayside in the bigger picture. That's just a reality. Interestingly, that is very similar to what's gone on the investor side, which is the other reason that this hasn't happened yet. Investors have had a million other opportunities in the post-COVID world over the last decade, since the great financial crisis, and governments pumping money into the system and the various things that did to money flows. There's been lots of opportunity for people to make money just sitting in market funds, buying weed stocks, buying crypto stocks, buying AI. There's been a lot of opportunity to make money in sort of other things. And so nobody's bothered to, there hasn't been this sort of driving need. Okay, wait, where is the world economy going, and how can I predict that on like a commodities basis? Oh, we're going to need more copper, I should invest in copper. That thinking pattern just has not been very present. Sure, there's some of us who think about it all the time, perhaps to my own detriment because I think about it too much, but that really hasn't been at the front. It used to be more at the front because we used to have more reliable patterns of growth and commodities playing a role in that, and then contraction and commodities falling off the table. But now things are more complicated, especially with money printing, and then with all of the impacts that money printing has had on money flows. So I think the investment side hasn't followed through, and governments have been a bit distracted, both for sort of similar reasons, but that keeps the spring getting more and more coiled, because while everyone's distracted and with their money and their time on and focused on other things, we're still not building new mines. But copper demands continue to rise. So at some point, I think governments are going to have to step in and say, wow, we really need to focus on expediting permits for copper exploration, for copper development, for copper everything, because we are going to be screwed if we don't. So that tipping point will happen. It's not going to happen tomorrow, but it is something that is coming. Whether it comes before or after the copper price sort of shoots up because people start actually having a hard time getting their hands on copper, I don't know. But I think those things will happen. There isn't going to be enough copper. Copper prices are going to go really high, and or simultaneously in the mix, governments are going to say, oops, we really should have been helping miners fill the need that we have created by pushing the green transition. We need to help that happen, because for sure, the reason we don't have copper mines is investors haven't been interested. Permitting has been increasingly and excruciatingly difficult for a long time. I get that environmental permits are necessary. I love the environment, but it can't always take 20 years to permit a copper mine. That just doesn't add up. And so, and then of course, deposits have become a little bit harder to find, especially when there isn't the money to look for them. So these things will come together. It's been a grind, but we are seeing in the junior space some nice responses to copper discoveries, especially I feel like how the market responds to sort of a porphyry discovery is a bit of a marker of sentiment, of forward-looking metals investor sentiment. And these days, we're getting some nice response when people tag into what might be a nice copper porphyry. People are like, ooh, that could become big. And there's been some fantastic successes, of course, like Filo mining, whatever. I don't know what the number is, 100-folding in value or whatever it was, that helps people want to be on board with copper porphyry discoveries. But it is happening. People are paying attention because there is awareness of this dramatic need. We just need a little bit more of the generalist politician and investor to start putting their mind to the problem.
Very well said. Peter, your thoughts on copper?
Just a couple of points. One is that, from what I've been reading, the expected deficits for this year are actually catching a lot of analysts off guard. They're going to be bigger than they had predicted. You've got Chile, you've got Zambia. Chile, obviously the world's largest, copper producer, is downgrading its production forecast for this year. And then on top of that, you have copper miners whose costs are expected to be up something like 11%. Across the board for this year. So it's they're producing less. It's costing them more to produce, And an interesting stat I came across is that they're finding less and less of it. Between 2013 and 2017, they found 71 million tons of new copper. The 4 years after that, the 5 years after that, up till the end of 2022, with more money spent on exploration, they found 4 million tons instead of 71. That is really alarming. So where this copper is supposed to come from, especially if they're not facilitating, like Gwen said, exploration permitting, mine permitting, all of these aspects, it's going to be very, very challenged. And there's going to be a period where until supply can even hope to catch up, demand is just going to overpower it so dramatically that the price of copper is going to have to just react and move up, and it's going to take this sector with it. That's my view. Absolutely.
Well, let's talk lithium and battery metals. Lithium, a commodity that ran up dramatically in price and then came back down. I'm personally not super bullish on the space simply because I see so many projects out there. It feels a little bit like lithium mining are the new pot stocks. Maybe I'm off there. Peter, how do you see the lithium space positioned right now? Have all of the big gains already been made, or is there still opportunity in the sector in your view?
Yeah, so I think that if you looking at the lithium price is probably the best summary of where it's going and where it's been. It obviously just exploded higher. It's pulled back tremendously from there, and it's sort of started to climb back again reasonably from those lows. And yes, I think that you're right. It has become probably overhyped to a fair extent. And then balancing that, you've got things like Mexico, for example, that nationalized its lithium industry. Chile followed on that this year, and then you've got some of the largest producers like Albemarle who are looking at Australia, for example, to find explorers to fund developers because their equities are relatively less valued or not quite as overvalued as elsewhere, and Australia is a great place to find and produce lithium. And then you've got these large users of lithium. Stellantis is this conglomerate automobile manufacturer that is planning to produce something like 50% of its sales by 2030, being EVs. And they're starting to buy directly into projects. We've seen it with copper for Stellantis. We've seen it with lithium, for example. They're trying to integrate their entire, vertically integrate their entire production process. And they need, if they're going to meet these targets, they need to ensure that they have access to these critical minerals. And so you're seeing these moves that you've never seen before, seeing these large manufacturers vertically integrate, really looking at very carefully, and then really ponying up lots of money. We're talking, in many cases, hundreds of millions of dollars to secure access to these minerals. So yes, I do agree. Lithium has gotten ahead of itself. But I think that probably in a less excited way, but over the next years, perhaps even decade or two, I think that it's got a long way to go. We've seen, again, we've seen that with so many markets before. This was, like uranium until Fukushima hit, when it exploded higher. Silver in the silver squeeze. So we had some sort of a lithium squeeze, I guess. But then these things dial back, people come to their senses, and then they really start to look at the fundamentals of the market, and those remain very, very, very sane.
Gwen, what are your thoughts on lithium?
I mean, I think Peter summarized it well. I mean, I think maybe a shorter way of saying some of that is that it's maturing, right? Like I mentioned before, that 20 years ago, we used lithium for almost nothing. And now we need to use it for like every battery, for everything. So the pace of growth of this commodity market is really actually difficult to wrap your head around. It is unbelievable, the pace of growth of this market. And so, yes, of course, that's created some insane price moves. We had them back in 2016. We had them again in 2021, 2022. These things never happen smoothly. They soar, they overvalue, they come back, they reset. A bunch of factors play into that: awareness, investor awareness, also technology. And here I mostly mean mining technology. There's this thing called direct lithium extraction, which is a way of getting lithium out of brines. To simplify, there's two ways that lithium can exist in the earth. It can be dissolved into a brine, or it can be part of a mineral in a rock. And we get a lot of our lithium from brines. And really the way that we have done it for a long time is we just let the water evaporate. And then we deal with what's left behind and get the lithium out of that. That, it turns out, is a slow process because water doesn't evaporate particularly quickly. And so there's a chemistry process where they go in and pull the lithium out of the brine instead of just waiting for the water to leave. This has been under development for years now. But every brine is different. And anyone who knows anything about chemistry knows that that means that every chemistry application is going to be a bit different. I say all of this because a huge component of the forecasts for lithium supply rely on a lot of proposed projects having good success and quick success with their proposed DLE, direct lithium extraction methods. Over time, just like how the lithium market had to sort of mature, DLE will also mature and it will get more reliable. We aren't there yet. DLE is not a reliable thing yet. So there will be more bumps on the road, I think, in getting these DLE projects going than a lot of the forecasts, the optimistic forecasts suggest. So that's the sort of brine side of things. I think there's bumps in the road. It will happen. It's going to happen. Lithium is this necessity. There's a lot of it out there in the world. We just need to get a bit better at how we pull it out of brines. While that's underway and there's questions around brines, the other thing, because brines have always just been a thing that you could kind of pump out and wait for it to evaporate, and then there's your lithium, there hasn't been much searching around the world for hard rock lithium. Like, there just wasn't any need. We didn't use it. There were brines. It was fine. Now all of a sudden we're like, oh, maybe we should look for hard rock lithium. Maybe that's a thing that's valuable. And so I think right now the Canadian scene for lithium exploration is a really interesting capture of that moment, which is there's a bunch of exploration companies that are doing with government databases what explorers did when they were looking for copper in the 80s. They're going in and looking at province-wide lake sediment sampling, which is like, this data has been sitting there forever. This stuff was often collected in the 70s. And guess what? There's whopping strong, great anomalies of lithium on top of pegmatites, which are the things which are the geologic formation that often holds this kind of hard rock lithium, all over Ontario and Quebec, and also sometimes in Saskatchewan and Manitoba. And so hard rock lithium exploration in Canada is in its infancy, which is really interesting because we've seen a few very successful stocks come who were early movers in that. A lot of times, actually, they're Australians who were more familiar with this process and took their knowledge in Australia and came to Canada 5 or 6 years ago and started this process. And some of those stocks have, of course, done incredibly well. And now the second round of explorers are going out and being like, oh, well, we should do that. That's not just bandwagoning. I'm not at all talking down to them. These are people who are like, oh, wow, right. That's a good point. Nobody's looked for hard rock lithium. Canada is rife with these anomalies and pegmatites, and we should go look. So I do actually think that there's some opportunity in the next little while for there to be probably some exciting hard rock lithium discoveries in Canada, like this season, from programs that are underway right now. Then this is all part of the maturing market where by next summer, I don't know if those same kinds of discoveries will get the kind of attention that I think they will now, because By next summer, there'll be even more of them. By the summer after that, we'll be like, oh, guess what? There's actually a lot of hard rock lithium in Canada. We're not there yet. We're still in the early days. So I think it's a new or rapidly growing markets are always about the details, right? And so here there's details on the lithium price. There's details on the kind of technology that's used for mining. There's details on where lithium and what kind of lithium has or has not been explored for. And so I think that there's real opportunities within the lithium space, but it isn't just a broad, oh my gosh, lithium, buy anything and it's going to work. That's not the moment we're in right now. We're in a more refined moment where there's definitely opportunity because DLE isn't always going to work. We're still going to have deficits. Demand keeps rising. Oh my gosh, everybody's buying an EV. Like this is all happening, but you just need to have a little bit more knowledge to get the best bang for your investment buck.
Well, let's end on where you're both looking for opportunity in these various metals. Are you looking at the big producers, developers? Are you looking in the junior mining space? Are you speculating on explorers? Is it a mix of all those? Do you look at ETFs? I know there's a lot of questions there, but just your overall strategy of how you're looking at the space and approaching it from a capital allocation standpoint. And I'll start with you, Peter.
So, I mean, as you know, my focus is silver, but as Gwen mentioned, we do write Evergreen Investing together, and that's a higher level, more of a higher level approach to the whole sector. So we have exposure to a lot of these metals through ETFs. We're looking to perhaps progress that through to higher level producers over time, and so slowly go down the risk spectrum. And so, as I say, you know, things like copper, uranium, silver, definitely lots of exposure to these metals. When it comes to silver specifically, myself through Silver Stock Investor, the answer is yes. I mean, exposure at all these levels. But I would say that right now, the opportunity is especially, although it's the producers, the mid-sized and the larger producers that seem to be reacting first to increases in the silver price. I would say that the opportunity exists in the juniors because they've been ignored, and because I think that we're still going to see big reaction to discoveries, and I think some discoveries are in play as we speak. You know, I'm talking about like Mexico. I'm talking about places like Bolivia, Canada. There's some fantastic discoveries that I can see that are in their infancy, and so I think we're going to get some fantastic reaction to that. That's where I see we could see some big moves come in that space.
Gwen, over to you.
I often answer this question not about where my money is, because I spend all of my time thinking about this. And I know, you know, like junior explorers who have, you know, are just putting the first drill hole in the ground. I love that. I can understand that. I can talk to management. I can pick up the phone and talk to them. I am unusual. So it doesn't necessarily help for me to answer where my money is, because this is my day-to-day. My answer is always, it depends on the investor. And so I think investors should certainly consider the things that we've just talked about, which is that the green transition is a reality. Metals deficits are huge. Springs are getting coiled. I almost said that backwards, but I got it out right. Springs are getting coiled, so that when investor and politician interest sort of swings more this way, I do think that we're going to get some dramatic moves. So being positioned is the most important thing. The details of that positioning depend on you. And so if you want to just have exposure to this broad opportunity, I think that's a really good idea. And that's, like Peter said, that's sort of what our evergreen investing is about. Get yourself into some ETFs, like have exposure to copper, have exposure to uranium, have exposure to silver, have exposure to carbon credits, have exposure to, you know, a bunch of the things that we need to make this green transition happen. And then just sit back and wait. Then the details don't really matter. You're talking about a medium-term horizon, and it's going to play out, and that's good. If you are a junior mining investor, then you're more like you sit in a similar seat to me, and I don't need to tell you that this summer has been tough. There's not a lot of there's some money out there, but it's tough. Even good companies are not having an easy time raising capital. So the big things to do right now are to invest in companies that have money and can do work. You're not going to get any returns on a stock that's waiting for a better market to be able to raise money. They are only burning. So look for companies that have money, and that helpfully is also usually an indication of whether management works, whether they have the capital markets expertise and connections, whether they have the quality of project, whether they have the clarity in their business plan to get that money attracted to them. So it's a good hallmark of whether the stock probably makes sense. So do they have money? Are they doing things now? And discovery stories work. Like a fantastic discovery will work even when the market, most people are on vacation or thinking about AI or whatever it is that they're doing. Discoveries will work. So absolutely, if you have conviction in a discovery play, then go for it. That's always an option. No matter the market, that's an option. So it depends on you. It depends on how much time you spend following these stocks, what your time frame is. I have the whole range because I do have a lot of explorers. I make sure that I'm paying attention to what they're doing and their time frames to action, and when I think news is coming, and things like free trade dates and financing needs and all of that. If that's not your shtick, if you don't want to do that, that's fine too. Find a different way of getting exposure on a different timeline to this sort of big investment thesis.
Well, thanks to both of you for joining us today on the channel. Peter, tell us about silverstockinvestor.com.
Silver Stock Investor is the only investment newsletter that's focused exclusively on silver, and it covers the range from physically backed ETFs and large producers all the way to junior explorers. So if you want to follow that space, I think it's one of the best ways to do it. And you just need to go to silverstockinvestor.com and you can follow me there.
Great. I'll put a link to that in the description below, along with Resource Maven. Gwen, could you tell us about that service?
Absolutely. So Resource Maven is the newsletter that I've been writing for almost a decade now. It's about my thoughts, buys, and sells in the metals and mining space. So Peter and I, we work together. We don't ever take money from companies for coverage. We write about what we are doing with our money and why we are doing it. And the reason is from sort of what I just said. I spend my days and Peter spends his days. This is researching, talking to people, figuring it out, and putting our money to work. We know that there's a lot of investors out there who are also really interested in this space, but don't have this as a day job. They have other things taking up their day job. So it made sense to us that we share our knowledge because people deserve the opportunity to play this space as well, because it can be a really fun, interesting, and hopefully profitable space to play. So yeah, I write a weekly newsletter about that. You can find it at resourcemaven.ca. And I'll just at the end say, we do have Evergreen Investing, which is our newer, started this year, newsletter that is about this evergreen investing opportunity. It's a monthly. It is not high risk. It is low risk, explaining these concepts, explaining how to position for that medium-term horizon. That's a monthly newsletter, and we're just wrapping up the next issue because it'll go out at the end of August. So you can find that at evergreeninvesting. Oh my gosh, Peter.com, right?
.ca. Yeah,
.ca. See, this is why I stopped. I always get it wrong. Evergreeninvesting.ca.
Great. Well, I will put a link to that in the description below so people don't have to type it into their browser. It's all good. And thanks once again to both of you for joining us, and hope to continue the conversation on another panel in the future.
Fantastic. Thank you for having us.
You bet. Look forward to it. Thanks, Jesse.